Good morning, good evening, good afternoon. Good morning, good afternoon, good night. It doesn't matter when you're watching this, just as long as you're watching. Alright, so we killed the trade. We're what? Positive $46 instead of negative $80 on the day, which is good by me. I'm going to go ahead and explain exactly how I went about doing that to show how the proof model itself went ahead and worked out. Today was a little bit of a tricky start, but nonetheless, we understood exactly where price wanted to go. So here we could go ahead. I'm going to start off with the SMT divergence and then go further down from there. So 9 o'clock, 8 o'clock open. We could see that price right here did not go ahead and blow this high on NASDAQ, where ES came up and touched this high, or blew past this high. That right there showed me that price wanted, if needed, had the opportunity to go further up if we did not see confirmations to the downside showing that price didn't want to do that. So after the SMT divergence, what is an SMT divergence? It's when one index makes a high and another high, making a higher high, and the other index makes a high and another high. All right, that is the SMT divergence. From there on out, we need to go into the 5-minute time frame and see whether or not there's a break of structure indicating that price has already filled orders to the upside and then wants to pick up orders here to then offload orders somewhere in the downside. Now, in order to see that happen, we need to be able to go ahead and see a break of structure on both indexes. Okay, so we can see the liquidity sweep. After the liquidity sweep, after we see the reversal, we're now waiting for the confirmation that price wants to go down via break of structure or inverse fair value gap. Now we got the fair value gap drawn here. Did we get the break below here? Did we get the break of structure? Yes. Did we inverse the gap? Yes. So that's a double confirmation within itself that price wanted to go down. After that, we're going ahead and relying on the EQ level that is right here. So price came down, price came up. After price, well, what we want to see, what we want to see in equilibrium. And what is equilibrium? Equilibrium is nothing more than a tool that we use to determine where discount lies within the market. So if you want to go ahead and have an EQ explanation, go watch my EQ video that's going to be coming out later today. Anyways, we see price come down. In order to see price respect and want to continue down and plus get a better entry, we need to see price come down, come up, touch this 0.5 line. At this point, we're sitting in the 1-minute time frame to get a better understanding to what price wants to do. Now you can see, did I wait? You can see right here. Did I wait on this confirmation or did I just enter? I just entered. So step 1 to where I went wrong is noticing that I messed up and didn't wait for confirmation to the downside showing that price wanted to go further. I had to go ahead and kill the trade for a shorter loss. Leave. Came down and then it came back up and I killed the trade right here. So I said, all right, fine. We're going ahead and repeating the exact same steps, but this time we're waiting. Or did I get a break of structure to the downside? I don't think I got a break. I think there was no retracement to show that price wanted to retrace. Entered in too soon. Although we did get the break of structure, there's nothing indicating that we have a retracement in here. So that's step 1 where I went wrong, right? What I did right though with the second trade is notice that I messed up and waited for EQ to come up and then come back down. So then give me the break of structure to show that price wanted to continue further down. this trade, I messed up this trade. I'm just gonna, this is all me being completely transparent with you guys. So. You were down here. But I had to put it at, no. Boom. Okay, so price came down, it gave me the break. Price came down, it gave me the break of structure. I entered it off the break of structure, and you can see price flowing in my direction. Now, my execution was excellent. What I did not do, and what I repeated to do from the last trade, was overextend my take profit. Now this isn't as bad as this. You can see that this is a 10.77 risk to reward ratio, where this is more of a appropriate risk to reward ratio of 3.65. That would have been like 3. We're gonna just keep it 3.65. Your broker will round up the number, the last number. Anywho's, getting out of that finer detail, we can see price go ahead and respect this. Now, if I were to have started looking for take profit points instead of having so much confidence in the market, so say go to the 5 minute, we were then to look to see if we have a fair value gap. If we have fair value gaps to then go off of, those would be take profit levels. So we have beginning of there. I'm gonna leave these green for you guys. So it would, from here to here, anything in here could have been take profit. From here to here, anything within this range could have been take profit, and left it at that. But what I do, I didn't respect any of the other lows that were anything more to the left hand side of me to show me that there was price looking to be seeked. Instead, I said, "Oh, looky, golly gee, we're shooting down on the 4 hour. Oh, golly gee, that means we're about to ride the wave. We're gonna ride the wave, guys." Psych, motherfucker. That's not exactly what happened. I didn't get fucked, but with good risk management and just me being good at managing my trade period, I was able to go ahead and continue to look for continuation confluences to show itself that price wanted to go down, and then after that I waited for breaks of structures to show me that, or to show me a confirmation that price wanted to continue down. So let me just give you a little bit of sauce. If you're late to the party and if you have a very strong bias, at this point your bias will be strong because market structure is proving. So say if you had a bias of shorts today, you did your due diligence, you did your analysis, and you came up with shorts. And let's say you went to go walk your refrigerator, or the monkey down the street went ahead and threw poop at your window, and you had to go ahead and just step away from all this, right? And you missed this initial move when price went ahead and came up and respected EQ to then give you the break of structure to the downside, or the inverse. Yeah, it would have been the inverse. So, or the break of structure. You get the break of structure first before you get the inverse. This candlestick comes straight down, blows through this low, giving you that break of structure, confirming that price wants to go lower. So if you, again, if I would have just taken, I lost my train of thought, I'm just trying to get back on point. If I would have just taken it up to some appropriate, more appropriate levels, this would have been better. From there on out, oh, yes. Once you miss your move, you want to then rely on the continuation trades and the confirmation, or not continuation confluences, and something. I don't know. Something is just going. My soul is just telling me something is wrong. So after we go ahead and miss the move, we're going to go ahead and use equilibrium to give us confirmation that price, or continuation that price wants to. We're going to use that as continuation to price go down, and after that, we're going to look for a break of structure out of that to show that price wants to go down further. You're going to. I personally would have continued that every single time the break of structure ends. Why? Because that low has already been. Liquidity has already swept out that low and is looking to either go further down or further up. Now, if he goes further down, like here, then cool. You know, then you're golden. You can do what you need to do. But that's not what happened with me. So, anyways, back onto this trade. I told myself I'm now just getting into the habit of going ahead and learning partials, but I'm not applying them right. So what that means is I'm already in the 1 minute time frame, and I already seen that price is respecting the trend line. So after that, what I'm waiting for is a break of structure to show me that price wants to continue down. So then take price off the table all the way, and from there take profit. Where am I taking profit? I had take profit points lined up, but I didn't respect them. So could have just taken profit at the break of structure or waited further down, so then repeat the process to continue down instead of overextending, or not taking the trade. But that's kind of what I did after this. I took myself out of this trade right here. I took myself out of the trade because I just noticed that everything was wrong. Everything was just not sitting well. So I said, fuck it, let me go back in. How many times did I go back in? I went in again. I went in again right here. I just don't show it. Targeted this high. And then once more. Actually target this. That was actually the move. Now, seeing that trade, you're able to go ahead and see that would have played out well, but I did not wait for the break of structure. This needed to get broken below. I just entered the damn trade. And you could see price did not respect me just throwing out a decision and spiking me out. And that's why I had that deleted. It was like a 2-second trade, and I was like, oh shit, let me close that out before it actually takes me out all the way. And that took me out for $80, which sent me into the negative. But this trade, as you can see, I just didn't want to continue fucking with it. Like, this was okay. This would have been a beautiful trade. This honestly would have been a beautiful trade if I would have just cut it short here, cut it short here. I really should have just cut it short here and said, fuck it. But didn't do it. I didn't do it. I'm just so sick and tired of waiting in here, and on top of that, I needed to make a trade review. So to explain this, I seen equilibrium go ahead and get confirmed. There was a break of structure right here showing me that price wanted to go down. I didn't enter off of here, but I did enter off of here. And let me adjust this properly. And then I had to go ahead and put my stop at all the way at the high, so then target the low right there. This was the next trade, and this you could see was 2.5 more. A little better. Why did I overextend? Because I just had too much confidence in the market today. I had way too much confidence in the market today. So, anyways, yeah, I killed the trade. Doing this trade review. Now we could just either wait to see if price. Here, let me show you how I actually would have continued this out. We'll go to paper trading. So say if I'm still in the trade, Actually, we won't even do all that. Say we're still in the trade, right? Price, are you retracing? Draw up equilibrium from swing high to swing low. See price come down. We got to break a structure out of it, confirming that price wanted to go lower. We do. Boom, beautiful, and then we just wait to see if it were to have given me full take profit or to repeat the cycle all over again because of these lows being taken out right here. Or it could just flip too because of these lows being taken out as well. It's kind of been what this is about. Come down, come up, taking out these orders to come down, taking out these orders to come up, take out these orders to take out these orders to come down, come up, try to take out these orders, couldn't do it, so I said fuck it. Back down, taking out these orders, come up, come down, come up. You know, it's, you get the process. You get it. Let's see if this trade would have played out in my favor just following that. Just following that. Just to continue to see that price wanted to go down. So we swept liquidity, right? Cool. Now we gotta repeat the same process over again. We gotta go, or we could just wait for like the minute for this candlestick to print to see what it wants to do. If it wants to go higher, then we will repeat it. If it wants to go further, lower just a little bit, then awesome sauce. I personally, again, did not want to continue putting up with the seek and destroy environment. My trading style does not call for that. Honestly, my trading style doesn't even call for me overextending to fucking 10 P&L, but my trades, my model works best for small shit, 2.5s, 1.5s. Like, you go balls deep in 1.5s, and if you use this model, use a 1.5 and you can smack them motherfuckers easily. It's showing that it wants to go down. We're respecting these highs. We're not even blowing through them anymore at the moment. We didn't respect this high, but we respected this higher high. We didn't respect these highs, but we're respecting this all these higher highs. So, if I was still in this trade, knowing all that information, along with the other information that would be coming into this, yeah, so we're just gonna wait for equilibrium all over again. Knowing all that, I was just stayed in here. This price is showing me that we're wanting to take out these lows. We came up, what do we do? Taking out the low. Come down, what do we do? We're trying to take out this low. It's just back and forth move. But nonetheless, sellers are in control. Sellers are in control. We don't get a fair value gap to go off of, do we? Nope. There's nothing here for us to go off of. So we need, if we want to see a continuation, we want to see equilibrium be respected. If equilibrium isn't respected, then it's high time for these equal highs right here to be hit and all these other higher highs to be hit too. To then have price either want to rotate back down or give us a really deep retrace to the upside. But again, this is the reason to why I didn't really want to stick into this. Because fuck shit. And on top of that, I honestly just nailed myself in the ass with this trade. Although this got me a lot of money, I still nailed my ass and nailed my ass to the fucking wooden stake with this. And there are small little things that I shouldn't have done today that I caught myself doing and easily corrected. but nonetheless, could have saved myself a little bit of capital if I implemented the freaking trading model instead of getting in my way. Do I really want to sit here? Okay, so we'll get... If this doesn't go up anymore, we'll get a fair value gap. So our fair value gap and our equilibrium are both retraces. Let me explain. The fair value gap, what we would need to go ahead and see is price come down out of it. We don't want to see price come up, because if price does come up, then it validates, or it creates the inverse fair value gap, invalidating the price wanted to go further down, which means then we need to rely on equilibrium to give us a confirmation or a continuation to the downside, to then look further into a 1 minute time frame for a confirmation that price wants to go further down via inverse fair value gap or the break structure. So again, what we want to see is price come up and away from this. We don't want to see price come up, but we already have plan B set in motion just in case price does want to come up. We have this again, price needs to come up, come back down, give us a break of structure up here to again then go further. One thing I have to go ahead and stress is just because you know this shit and implement this shit, it doesn't mean that price is going to go ahead and respect it. If you want to go ahead and watch the trade review, or not the trade review, but the trade that I actually took live, or it was actually recorded. I'm so sorry. The trade that I took was recorded, and during that time, around 11:45, I was implementing the exact same strategy that I just now explained to you guys, but this candle, instead of moving down further, it spiked all the way up here. It spiked all the way up here, and I'm in the video, I'm just like, what are you going to do? Because at that time, it already inversed the gap, showing me that it wanted to go further up. And I was explaining that if price wanted to go ahead and inverse that gap, the possibilities that lie on the table were this. Would want to price, if it inversed that gap all the way, price would want to go ahead and take out equal highs that were sitting here. And then... It was right here. It's 45. Yeah, it spiked. So I was explaining that if price really wanted to go further up, what I really needed to see, or two things. If I wanted to kill the trade and give myself more confirmation that price wanted to go up, a few things needed to happen. One major thing was the inverse being created to the upside, like I just explained to you right here. That was happening over here. So I think it was right here. Yeah, it was right here. So I said, if I get the inverse, I will go ahead. If I get the inverse, price is proving to me that it wants to take out these highs, these equal highs, to then do a few things. Come down, reverse off of that, to then hit lower lows, or continue on up to seek out these 5-minute highs to do the exact same thing. Nonetheless, I'm not waiting in that moment of fuckery to decide on whether or not I want to get out at that moment. No, I'm having plan A set in motion. But I kind of disrespected plan A a little bit, and that'd be the inverse. Why? Solely put, because price has been testing resolve today. The market will test your resolve so much, and I know that. From prior back testing, forward testing, demo trading, funded account trading, however the fuck you want to put it. I know how that shit's gonna work. So at the end of the day, everything just played out in my favor. this is exactly how you guys could have had and made an opportunity out of all this just by following the confluences. Oh, I forgot to mention, I have the tendency of forgetting which pair is going to be going up and down after I find out the liquidity sweep. So what I've been doing as of lately is drawing out my fucking I've been drawing out which way the market wanted to go just to remind me. So if you guys see this, you know why. But you guys are gonna look over here at NASDAQ and be like, well, we just explained that price was going down. Well, yeah, at that time, if price really wanted to, what was this? There was a 1 hour gap right here. No, but I went off the 15. No, I went off the 5. A 5 minute. I went off of something. Yeah, right here. Again, same method applied. If price wanted to continue on up, we're going to respect this, come away from the fair value gap. But if price was looking to go further down, we were going to go ahead and disrespect this, continue on down. But I needed to go ahead and have 2 setups going. Those 2 setups being longs and shorts. So at the time, again, NASDAQ had the potential to go high, where ES had the potential to go short. So I had to draw it out. NASDAQ was going to go up, ES was going to go down. From there on out, it's just following the fucking model. It's just not getting in my own freaking way. Just not getting in my own fucking way. What I need to do is learn. I need to back test how to take partials more. But here's the thing. No excuses. I could do this on TradingView now. No excuses. I need to get better at it, so that way I could take partials even more, so that way that gives me more confidence to be in the trade, or if the trade goes against me, I could trail the stop. I need to learn that too. I need to get better at that too. So that way if price does come up and hit that trail stop, I'm out for good money. I'm not even going to wait on price to go ahead and hit my shit all the way. Booyaka, 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 booyaka. Anyways, thank you guys for stopping by. If you guys would like to go ahead and learn how to do this one-on-one, or have a community that would help you with your trading journey further on, I have a Discord. It is only open for about 5 spots. At the moment it's only open for 5 spots. You within the Discord, you go ahead and get my daily trades. You guys go ahead and get the breakdown. The videos are not going to be on Discord, but you could go ahead and get these videos on YouTube. All of these videos I moved everything over from my old disc. Here's the stupid part. Here's the funny story. I was actually going ahead and putting all my bootcamp videos on my gaming channel, thinking that this channel, my trading channel, wouldn't be seeing any love. But within the last week, I've been getting fucking subscribers out the wazoo. I appreciate you guys. Let me stop and say thank yous. Thank you guys for the people that have been supporting this and liking everything, from the shorts to the breakdowns to all my long-term content. Thank you. Nonetheless, everything is now on the trading channel, so that way you guys are going to easily access that. I need to go ahead and upload a few videos because the internet was fucking up last night, so we need to go ahead, just like it is now today, we need to go ahead and just make that all right. So thank you guys for stopping by. Remember, if you guys want to go ahead and join the Discord, type bootcamp in the comment section, and don't forget to like or follow. Love yous. See you guys later. Bye.